This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. A quiet data week is bringing more focus on larger systemic issues. Today, in the absence of those key data releases, we should note that after the GFC, regulators moved aggressively to get banks out of holding riskier assets. But that space has been filled by non-bank financial institutions. In fact, more than half the world's financial assets are now held by these non-bank institutions. The risks from this sector are enormous. And the irony is that these non-banks are funded in large part by banks. It is a systemic risk catching the attention of bank regulators. If you want to scare yourself, read the analysis from the New York Fed. That is not the only risk the Fed is watching. Now that they can see inflation returning to its policy range, a softer labour market could bring its own risks. Their labour market is not at that risk point yet, they say, but they are watching. Meanwhile, the US Dallas Fed factory survey in America's oil patch was little changed and uninspiring in their June results. But if there is a change worth noting, it is that expectations regarding future manufacturing activity pushed up notably this month. The Future Production Index jumped 10 points, and the Future General Business Activity Index surged 16 points to its highest reading since 2022. Across the Pacific, the Chinese government plans to set up a rescue fund for struggling financial institutions, aiming to prevent a financial crisis triggered by their real estate market slump. Unlike similar funds that were created to protect customers, the purpose of the new fund is to prevent financial institutions from collapsing suddenly, given that bankruptcies of these large enterprises could cause turmoil in the financial markets. And Taiwan said its retail sales rose a modest but better 2.4% in May, but their industrial production was up an impressive 16% from the same month in 2023. In Europe, the IFO Business Climate Indicator for Germany unexpectedly declined in June from May, but remains higher than what it has been for most of the past year. And perhaps we should note that the price of lithium carbonate has fallen back to levels first reached in 2018. The US Treasury 10-year yield is now at 4.26% and unchanged from yesterday, and the price of gold will start today up $12 at $2,332 an ounce. And oil prices are up $1 at $81.50 a barrel in the US, while international Brent price is now just under $85.50 a barrel. And the Kiwi dollar starts today unchanged from yesterday at 61.2 US cents. Against the Aussie, we're down 20 basis points at 92 Australian cents, and against the euro also 20 basis points lower at 57.1 euro cents. That all means our trade-weighted index starts today down 10 basis points at 70.8. And the Bitcoin price starts today at $60,160, and that's down a very sharp 6.1% from this time yesterday. Volatility over the past 24 hours has been high, at just on plus or minus 3.6%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.